Hey traders, John Fortune here with this week's weekly Forex forecast for the 13th of April to the 17th of April 2020. As always, we're going to start off by looking at the US dollar index and crude oil before running through a number of markets, looking at the key levels of support and resistance in the process. We're also going to be highlighting some of the targets that we're going to be looking for in this coming weekend, also for the weeks ahead. So I hope you're having a nice weekend. Let's jump over to the charts and see where the money is this week. As always, we're going to start off by looking at the US dollar index. Now, usually we start off by looking at a 4-hour chart of the dollar index, but we're looking at the daily chart here. The reason is I wanted to zoom out a little bit just so we could get some more information on this chart of what the dollar index is doing right now. You can see that we have had this big push to the upside, this momentum rally to the upside. This is giving us an early indication that we are going to be looking for further advances in the dollar index at some point. Recently, over the last 10 days, we've pretty much just moved sideways. We're having a breather after this explosive rally to the upside in the dollar index. If you look at the fundamentals and you look at the number of jobs being lost in America, this is highly deflationary, especially when you take into account the commodities as well. And this is going to fundamentally give us a bias, a long bias on the dollar as well. So everything here is still structured to the upside in the dollar index on a technical basis and currently on a fundamental basis. You also have to remember that the average recession, generally speaking, is about 11 months historically. And we've only just really entered this kind of recessionary phase in the global economy. So this is likely to continue at least throughout this year based on historical performances. And this is likely to see a strengthening of the dollar with that. As it stands, however, going into next week, though, you can see in terms of the shorter term, we do have this kind of expanded pattern we looked at in previous videos. You can see also the volatility that came into the dollar index recently. I mean, this daily candle here, for example, takes out the low and the high of about 30 trading days previously. So the volatility has been huge, and we're basically getting a little bit of a breather as it stands now. So very simply put, to cut a long story short, in the dollar index going into next week, as we are starting to correct and we may just continue to move sideways, there is no clear bias in the dollar index one way or the other. So when we go through the markets, we're going to be looking at trading these markets on their own merit. That is the way they are independently structured without a strong bias in the dollar one way or the other for next week. So next market we're going to look at is crude oil. Now last week in a number of markets we just kind of corrected, we didn't really go anywhere. We were looking for a pullback towards the 21.17 in crude oil, and we have started to pull back towards this area now. Very simply put, going into next week, what we're going to be looking for is if we can pull back further, that would be fantastic as always. If we can come back and test broken resistance from the past, turning support at 21.17. This is going to be an area next week that we're going to start to look for potential bullish setups. And if we get the right kind of bullish setups in this market, we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 32.84. So next market we're going to look at is euro dollar. Now euro dollar is still structured to the downside. It's pretty much a replica of the US dollar index that we looked at, but just the inverse. So instead of to the upside, this to the downside. The problem you can see here, very similar to the dollar index as well, is because of the massive amount of volatility coming into the markets, we're now kind of quite far away from a number of these levels. So very simply put, going into this week in the euro dollar, we are still going to be only focused on short positions. And anywhere in this area, if we can start to get some good bearish setups in this market, and for example, if we could break down into this area, let's say down to the 1.080, this is going to be a good opportunity to start to look for short positions in euro dollar. We wouldn't short it just here because we're currently still trending to the upside. Okay, so we'd need to, we don't just short these down towards the targets every week. We pick the ones which set up the best, and we do this with our members. This would be a good setup going into next week. We can start to break down to the 1.080, and then we pull back in this area. This is a good sign to start to look for shorts. So when we go into this market next week, this is going to be a great place already if we can start to reverse to look for bearish setups. And we are once again going to be looking for bearish setups down towards the next key of support to the downside and the target set at the 1.05690. So next market we're going to look at is pound dollar. Now you can see that the pound dollar is currently structured to the upside. We have this above the 1.21630 as near-term structure to the upside. This red line up here tells you that the overall trend is still to the downside, so we are still overall in the bigger picture looking for further declines. However, as the dollar index corrects after that huge rally, we may see the pound continue further up. So very simply put, going into next week, as this is structured to the upside near term, and this is in line with the near-term trend but counter the longer-term trend, Any pullback in this area is going to be viewed as an opportunity to start to look for bullish setups. And if we get a pullback and we get the right kind of bullish setups in this market, we're going to be looking at initiated longs up towards the next key area of resistance, the upside and the target set at the 1.2728. So the next market we're going to look at is US dollar Japanese yen. Now last week we were looking further declines to the downside in this market. We started the week in this area and we finished the week here. So just like with a number of markets, we really didn't do anything last week. We just moved sideways. It's very tricky to make money in markets which don't move. So if you found last week difficult, don't worry. This is just part of the game. However, it doesn't stay like this forever. And going into next week, we are still focused on short setups in this market. As we've started to already break to the downside in this market, any pullback in this area is going to be viewed just as another opportunity to start to look once again for bearish setups. And we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 104.62. So next market we're going to look at is Aussie dollar. Now we are currently structured to the upside in Aussie dollar as we get that correction in the DXY. This is very similar to the pound dollar which we looked at. Again, this does not mean we have an overall bullish bias fundamentally on Aussie dollar. It just means going into next week. This is a very short-term overview that we're looking at. This is a move for next week. We are structured to the upside. So any pullback in Aussie dollar for the time being is going to be viewed as an opportunity to start to look for bullish setups. And if we get a pullback and we start to see some nice bullish setups in this market, we're going to be looking at initiating longs to the upside and next key of resistance at 0.6461. So the next market we're going to look at is New Zealand dollar. Now we are structured to the upside in New Zealand dollar as well. And again, this is because of that failure to follow through to the upside in the DXY last week. And that continued correction is providing a bit of a relief to some of these currency pairs which have declined very, very sharply off of that rally in the dollar index. So very simply put, going into next week, we are still looking at opportunities to the upside in this market. Any pullback in this area for next week is going to be viewed as an opportunity, especially if we can come back and retest broken resistance, turning support at 0.59220. This would be good because it would give us the best risk to reward ratio setups towards the target. So any pullback in this area is going to be viewed as an opportunity to start to look for long positions. And we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 0.6195. So next market we're going to look at is US dollar Swiss franc. Now very similar to the DXY and also euro dollar, we're kind of right in between these two levels here. So very simply put, going into next week, we are still only going to favor long positions in this market if we get those setups. What we would really like to see here is we would like to see the market break into the upside. This, just as we looked at in euro dollar, a break to the upside here would be a fantastic opportunity to start to look for bullish setups. And we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 0.9959. So the next market we're going to look at is US dollar CAD. Now in the US dollar CAD, you can see I've added a couple of trend lines here. I don't generally speaking use trend lines, but in this case it does provide quite a good visual representation of what we have here in the US dollar CAD. We do have a massive bull flag. It is just continuing to correct because the DXYs continue to correct as well. However, we are still overall structured to the upside and we are sitting just underneath. However, we would still consider this to be holding this key area of support highlighted last week at the 1.3990. So very simply put, we're still going to be looking only for bullish setups in this market. Again, we're not going to just be stepping and buying this randomly. What we'd like to see is we'd like to see a reversal from this area first. So for example, if we could break up and we could come and take out the 1.4150, this would be an indication that we can start to look for further advances to the upside. Any bullish setups in this market going into next week is going to be viewed as an opportunity to look for long positions. And we're going to be looking at initiating longs up towards the next key of resistance to the upside and the target set at the 1.4688. Now, because this is a longer term target, it's very unlikely we're going to achieve this next week. So if you want an intermediary target, if you want to start to look for a profit target next week instead of holding any of these positions, you can look up towards this level here at the 1.4350 as an intermediate target for next week. And last but not least, we have gold. Now, last week, gold actually broke to the upside, and it broke to the upside in line with the overall uptrend in gold. You can see the longer-term low down here at the 1445.80. So this is pretty bullish for gold going into next week. Any pullback in this area towards the key area of broken resistance from the past looking to turn support at the 160207. Any pullback in this area, and preferably a retest as always to give us the best risk to reward setups, will be viewed as an opportunity to start to look for bullish setups. And if we get the right kind of bullish setups in this market, we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set, with the 1737.30. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing, and subscribing. A big thank you to everyone who does that on a regular basis, and a big thank you to everyone who has subscribed to the channel so far. I want to wish you all a nice weekend, and I want to wish you all the best for next week. The only thing left to say is take care, and don't forget to trade safely.